Hi there. In this video, I'm going to be looking at influences on financial management, more specifically the influence of government and global market influences. Okay, I'll start with influence on government. There's two ways, obviously there's many ways that the government influences business. However, in financial management sense, we've got ASIC. ASIC, the Australian Securities and Investments Commission. Okay, now they're an independent statutory commission. What that means is that they're independent, so the government doesn't have any sway. There's no, it can't be made political, so it's independent. However, it's got the backing. It's got it gets its powers from the Commonwealth government. Okay, so while it's not political, it's got the backing of the government to be able to operate. Okay, so that gives it a bit more authority. Okay, now their aim is to help reduce fraud and any unfair practices in financial dealings, any financial activity and trades, to really ultimately benefit the consumer as well. Okay, to make sure they're not getting defrauded in any way. Okay, another major way that the government influences financial management is through taxation. Okay, companies and corporations, they pay a flat rate of 30%. Now, this is different to sole traders and partners, okay, because they're unincorporated. They pay tax based on their personal income tax. So, by virtue of being an incorporated entity, private companies and public companies are separate legal entities. So, they pay a flat rate of 30%. And then the individual, board members or directors or whoever it may be, however they're structured, they then pay their own personal income tax as well. Okay. Now, whether or not the taxation rate of 30% will either rise or decrease doesn't matter, because this is a legal obligation. Companies need to pay it. Okay. So in essence, it's a compliance cost. If they don't, then they're not complying with the law, which is to pay taxes. Okay? And then how does the global market influence financial management as well? Well, one way is through global economic outlook. Okay? So basically, how is the level of economic activity in the world, okay, consumer demand, as well, how is that projected to change in the future? Okay, is it projected to go up? Is it projected to go down? If economic activity in the world goes up, that means that much more is being produced. If it goes down, it means that there'll be much less being produced. There might be higher levels of unemployment as well, and that will have an effect on financial management. There's also the issue of availability of funds. So basically, how easy is it for a business to borrow money from international markets, so from overseas? Okay, so how easy is it for an Australian business to borrow money from, let's say, an American bank or a German bank or a Chinese bank? Okay, now with that, however, comes interest rates. Now, as I said, money isn't free. Okay, you need to pay to be able to borrow that money, okay, in interest rates. However, if you're borrowing money from overseas, you need to also take into account exchange rates. Now, we will look at exchange rates in a lot more detail, again, when we look at global financial strategies. However, for example, if you're an Australian business and you're borrowing money from an American bank because the interest rate is extremely low, okay, so much lower than it is in Australia, that would be a benefit. However, you need to pay back the American bank in American dollars. Okay, they don't want Australian dollars, they want American dollars. They are, after all, an American bank. So, even though the interest rate in America might be extremely low, so you're, theoretically saving money, if the exchange rate, however, is not in your favour, you might find that when you convert the Australian dollars into American dollars to then pay your interest, then you might find that you actually might either just break even or actually lose money in the transaction as opposed to saving money through through borrowing overseas. So that's another influence on financial management. Looking at the exchange rate, okay, and actually working out, is there a benefit to borrowing from overseas, or does the exchange rate then negate any benefit I would receive? The next video in this HSC Finance series is the first in regards to the processes syllabus dot points, and that will start with planning and implementing. However, I hope this video on the influence of government and global market influences has been valuable. Thank you.